Welcome back, economic warriors, to Boss Economics World, the only show that cuts through the government spin, central bank jargon, and corporate fluff to bring you the raw, unfiltered truth about the economic mess we're all stuck in. I'm your host, the guy who's been yelling at the Reserve Bank of Australia since they thought 3.85% interest rates were a soft landing idea. Today, we're diving headfirst into the latest RBA blunder, freezing rates in the middle of a global tariff storm, all while Australia's economy is wobbling like a kangaroo on a unicycle. Buckle up, folks, because this is gonna be a wild ride, and the government, as usual, is asleep at the wheel. Let's start with the headline shocker. On July 7, 2025, the Reserve Bank of Australia decided to keep interest rates locked at 3.85%, defying the expectations of 27 out of 32 economists surveyed by Bloomberg and sending traders into a tailspin. The Aussie dollar spiked, three-year bond yields jumped 5 basis points to 3.42%, and money markets are now betting the cash rate will dip below 3% by February 2026. Meanwhile, the RBA's board is sitting back, sipping their flat whites, and claiming they just need a little more information to confirm inflation is on track to hit their sacred 2.5% target. Oh, bless their hearts. The RBA is treating the economy like a science experiment. Let's just wait and see if it explodes. While the rest of us are stuck paying off mortgages, dodging inflation, and bracing for the fallout of Donald Trump's tariff tantrum. This isn't prudent caution, folks, it's paralysis. And who's to blame? Well, let's not forget the government's role in this mess. Years of fiscal mismanagement, unchecked spending, and productivity-killing policies have left the RBA with no good options. They're stuck choosing between a rock and a hard place. Thanks, Canberra. The RBA's statement smugly notes that inflation has slowed to near the bottom of their 2-3% target band. Hooray, right? Wrong. Let's peel back the curtain on this so-called success. First, household spending is tepid, a fancy way of saying Aussies are too broke or too scared to spend. Consumer sentiment surveys are dominated by pessimists, with the Westpac Consumer Sentiment Index plummeting to 84.6 in June 2025, a level not seen since the depths of the COVID-19 crisis. When people aren't spending, businesses aren't growing, and the economy grinds to a halt. Sound familiar? That's right, it's the textbook definition of a recessionary spiral. But wait, there's more. Weak productivity growth, which, by the way, has been abysmal under this government's watch, means unit labor costs are sky-high. According to the Australian Bureau of Statistics, productivity growth has averaged a pathetic 0.5% annually over the past 5 years, compared to the OECD average of 1.2%. This isn't just a whoopsie, it's a structural failure, fueled by overregulation, underinvestment in innovation, and a government more interested in photo ops than fixing the economy. High unit labor costs mean businesses are either hiking prices or cutting jobs. The RBA's wait-and-see approach is like watching a house fire and saying, let's just see if it burns itself out. Spoiler alert, it won't. Now, let's talk about the government's favorite pastime, spending money it doesn't have. The RBA's cautious approach is underscored by strong government spending, according to their own statement. Translation: the government is pumping cash into the economy like it's a stimulus piñata, and the RBA is terrified of adding more fuel to the inflationary fire. Just look at the numbers. In the 2024-25 fiscal year, government expenditure hit a record $650 billion, up 6% from the previous year, according to Treasury data. And what do we have to show for it? A bloated public sector, crumbling infrastructure, and a national debt to GDP ratio creeping toward 50%, a level not seen since the 1980s. Here's the kicker, this spending isn't even productive. The Productivity Commission's latest report shows that only 15% of recent government outlays went toward capital investment, the kind of spending that actually grows the economy. The rest? Subsidies, handouts, and bureaucratic bloat. Meanwhile, private investment is tanking, with business capital expenditure dropping 2.3% in the first quarter of 2025, per ABS data. Why? Because businesses are terrified of the uncertainty created by the government's inability to get its fiscal house in order and the RBA's refusal to provide clear guidance. This is economic mismanagement 101, folks, and it's pushing Australia toward a cliff. Now, let's zoom out to the global stage, where Donald Trump is back in the White House, swinging his tariff hammer like a kid in a candy store. On July 6, 2025, Trump unveiled plans to slap 25% tariffs on goods from Japan and South Korea, while Australia got off easy with a 10% levy, plus sectoral duties on steel and aluminum. These tariffs are set to kick in on August 1, 2025, unless someone talks him out of it, and good luck with that. The RBA is petrified, and for good reason. Australia's economy is heavily trade-dependent, with exports accounting for 24% of GDP in 2024, according to the World Bank. Our biggest trading partner, China, is worth 6.6% of nominal GDP in goods exports alone. And guess what? China is in Trump's crosshairs, with threats of even higher tariffs looming. If China's economy takes a hit, and it will, with the IMF already downgrading its 2025 growth forecast from 4.8% to 4.1%, Australia's commodity exports are going to tank. Just look at the data. Iron ore prices have already dropped 15% since Trump's tariff threat surfaced, hitting $92 per ton in early July 2025, per Trading Economics. But wait, there's a silver lining, right? The Productivity Commission says Trump's tariffs could boost Australia's real GDP by 0.37% because of cheaper imports and capital outflows from the US. Oh, please. This is the kind of ivory tower nonsense that gives economists a bad name. Sure, in a perfect world, we might see a tiny GDP bump, but in the real world, growing economic uncertainty is going to crush household consumption, business investment, and global trade. The Commission itself admits that trade policy uncertainty will particularly slow irreversible investment decisions, aka, businesses are going to sit on their hands, waiting to see if the global economy implodes. And when businesses don't invest, jobs disappear, and the economy shrinks. Simple as that. The RBA's paralysis isn't happening in a vacuum. Globally, central banks are playing a dangerous game of chicken, and the stakes couldn't be higher. The Federal Reserve has kept rates steady at 4.75% through the first half of 2025, while the European Central Bank, Bank of Canada, and Bank of England have all cut rates in recent months. Why the split? Because everyone's economy is a mess, but in different ways. Europe's dealing with stagflation, Canada's drowning in household debt, and the UK is still reeling from Brexit. Meanwhile, the US is riding a post-COVID spending high, but Trump's tariffs threaten to derail it all. For Australia, this global chaos is a double whammy. Our export-driven economy is vulnerable to trade disruptions, and our high household debt, at 185% of disposable income, one of the highest in the OECD, makes us hypersensitive to interest rate changes. The RBA's decision to freeze rates while others ease is a gamble, and not a smart one. If global growth slows, Australia's economy is going to get hit hard. And if the RBA waits too long to cut rates, we'll be staring down the barrel of a full-blown recession. But hey, at least they'll have more information to confirm the disaster they could have prevented. Here's the ugly truth, folks, the RBA's rate freeze isn't the problem, it's a symptom. The real disease is years of government mismanagement, coupled with a central bank too timid to call it out. Let's recap the evidence. 1. Productivity stagnation. Decades of underinvestment in education, innovation, and infrastructure have left Australia's productivity growth in the gutter. The government solution? More spending on vote-buying handouts, not growth-driving investments. 2. Fiscal recklessness. Record high government spending, with little to show for it, has tied the RBA's hands, forcing them to keep rates higher than necessary to offset inflationary pressures. 3. Global vulnerability. An export-dependent economy, left exposed to global trade shocks, thanks to a government too busy bickering over climate targets to diversify our economic base. 4. Central bank inaction. The RBA's wait-and-see approach is a cop-out, leaving households and businesses to fend for themselves in an increasingly uncertain world. And who pays the price? You do. The average Aussie family, already struggling with a cost of living crisis, is now facing higher mortgage payments, stagnant wages, and the looming threat of job losses. The professionals watching this, the financial advisors, economists, and traders, know the numbers don't lie. But the government and the RBA? They're too busy playing politics and passing the buck. So, what's the solution? First, the government needs to get its fiscal house in order. Cut the wasteful spending, redirect funds to productivity-boosting investments, and start diversifying our economy away from its dangerous reliance on commodity exports. Second, the RBA needs to grow a spine. Stop hiding behind wait-and-see excuses and start providing clear, decisive guidance. If inflation is under control but the economy is stalling, cut rates, now, not next year. And third, we, the people, need to hold both the government and the RBA accountable. Demand better economic management, not more empty promises. This is Boss Economics World, folks, and we're not here to sugarcoat the truth. The RBA's rate freeze is a band-aid on a bullet wound, and the government's mismanagement is the gun that fired it. If we don't act now, Australia's economy is headed for a recession, and this time, there'll be no one to blame but the clowns in Canberra and the cowards in Martin Place. Until next time, stay sharp, stay angry, and keep fighting the good fight.